Welcome back to the deep dive. Okay, I hope you were sitting down because we really need to talk about what is happening with your money.
Literally.
Literally the cash in your pocket. It is Wednesday, January 28th, 2026, and if you've glanced at the financial news at all,
In the last 24 hours, yeah.
you might think the charts are broken. The US dollar has just collapsed to a 4-year low.
We're seeing levels we have not touched since, the frantic days of February 2022?
It's incredible.
I mean, it is absolute carnage on the currency markets. And usually, when the world's reserve currency, the bedrock of the entire global financial system, takes a nosedive like this, you expect, immediate damage control.
Oh, absolutely. Emergency press conferences.
Right. You expect the Treasury Secretary to be on every network sweating through their suit, assuring the world that the strong dollar policy is still in effect.
You expect panic. But that is exactly where this story goes off the rails. Because instead of panic from the White House, we're seeing, satisfaction.
It's bizarre.
President Trump is out in Iowa right now campaigning for the midterms. And a reporter asked him point blank on Tuesday about the crashing dollar. His response wasn't, "We're fixing it." It was, and I'm quoting here, "I think it's great."
And that comment, that specific comment, is the thread we have to pull on today.
Yeah.
Because this isn't just about exchange rates or some numbers on a screen. We are looking at a collision of three massive, massive stories. You've got a president openly cheering for currency devaluation, a historic feud between the White House and the Federal Reserve that has basically turned into a legal war, and a global scramble for a new financial safety net that has sent gold to a mind-boggling $5,200 an ounce.
So $5,200. It still sounds like a typo to me every time I see it, but we'll get there. We have a massive stack of sources today, reports from CNA, The Guardian, deep analysis from the Investing News Network.
Right.
Our mission is to figure out why the safe haven of the U.S. dollar has suddenly become the asset everyone is trying to dump, and why the president seems to be holding the door open for them.
It really all comes down to one core concept: confidence. Currencies are, at the end of the day, a confidence game. And right now, the market is asking a very simple question. Does the U.S. actually want a stable currency?
And the answer seems to be no.
And the answer coming from the administration seems to be a resounding no.
So let's start there with the tariff man aspect of this. Trump's comment in Iowa, I think it's great. Why did that one sentence send such a shockwave?
Well, it's about signaling the end of an era. I mean, for decades, regardless of party, the U.S. had a strong dollar mantra.
Right.
A strong dollar keeps inflation low because it makes imports cheap. It means your paycheck buys more stuff from around the world. So when the president of the United States says he is happy with a weak dollar, he is signaling that his administration is prioritizing exports over inflation control.
Okay, so let's unpack that. If the dollar is weak, then American cars, machinery, soybeans, all of that is cheaper for, say, Europe or China to buy.
Exactly. It boosts manufacturing and exports, which, appeals to his base. But the market hears that and thinks, okay, the government is going to tolerate or maybe even engineer higher inflation.
And you have to remember the context here, which our sources lay out. This didn't just happen in a vacuum. Remember the Liberation Day shock?
Oh, yeah. April 2, 2025.
I remember the headlines were just crazy, but refresh us on the actual mechanics. What happened?
That was the day the administration announced punitive reciprocal tariffs.
Reciprocal tariffs. That's a bit of a tongue twister. What does it mean in practice?
It's essentially a policy of an eye for an eye. So if a country charges a 10% tariff on American goods, the U.S. automatically charges a 10% tariff on their goods.
No negotiation.
No negotiation, just an automatic match. And when that was announced, the dollar sold off by 10% almost immediately because it signaled a trade war was becoming, permanent policy.
And then, just to add fuel to that fire, we had the One Big Beautiful Bill Act.
The OBBBA.
I still can't believe that's the actual legislative acronym. It sounds like something from a cartoon.
It's definitely memorable, but the financial reality of the OBBBA was heavy. It cemented high budget deficits into law. So investors were already nervous about the massive U.S. debt load.
Yeah?
They were already nervous about trade wars. And then yesterday, Tuesday, the president essentially gave the green light for the currency to slide even further.
All right, so the president wants a cheaper dollar to help exports. But he doesn't control the money supply directly. That's the Fed's job. And the Fed is supposed to be the adult in the room, right? They're independent.
Supposed to be, usually. But what we are witnessing right now is the complete breakdown of those institutional norms. The relationship between the Trump White House and the Federal Reserve isn't just tense.
No.
It has turned into open warfare.
So let's look at the decision from today, Wednesday the 28th. The Fed had its policy meeting. What did they do?
They voted to hold interest rates steady. They're keeping the benchmark rate in the 3.5% to 3.75% range.
Which, if you look at the president's social media feed this morning, is absolutely not what he wanted.
Not even close. Trump has been demanding aggressive cuts. His argument is that these high rates are strangling growth, costing the economy hundreds of billions of dollars.
And he's not being polite about it.
No. He has called Fed Chair Jerome Powell stiff, stupid, and has repeatedly threatened to fire him.
I mean, calling the guy in charge of the global money supply stupid is bold. But there was a detail in the sources that I honestly thought was fake news until I cross-referenced it.
The Justice Department.
The Justice Department is involved.
This is the bombshell. This is the detail that has foreign investors really, really spooked. It's not just insults on Truth Social anymore. The DOJ has opened a formal criminal investigation into Jerome Powell.
Into the sitting Fed chair. While he's in office. What could they possibly be charging him with? Is he laundering money or something?
Oh, no, nothing like that. They are alleging fraud regarding the refurbishment of the Federal Reserve's offices.
The office renovation.
Yeah. The administration claims the renovations went massively over budget and that Powell is personally liable for the mismanagement.
Wait. Are we talking about, like, gold-plated curtains in the break room? Or just standard government construction delays?
Powell's side is that it was necessary safety upgrades for aging infrastructure, asbestos removal, security updates. But the specifics of the drywall or the plumbing almost don't matter.
It's the implication.
It's the implication.
Yeah.
Powell released a recorded statement calling this investigation a pretext for political intimidation.
So basically, you're investigating my office renovation because I won't lower interest rates.
Precisely. And for a global investor, this is the absolute nightmare scenario. The reason the US dollar is the global reserve currency isn't just because we have the biggest aircraft carriers, it's because of the rule of law.
Right.
Investors trust that the Fed makes decisions based on economic data, inflation, employment, not because the president needs a stock market boost before an election.
And if that independence is gone, if the Fed is just an arm of the campaign,
then the dollar stops being a neutral store of value and becomes a political tool. It loses its risk-free status. That is why you see the dollar sinking. It is a vote of no confidence in the independence of U.S. institutions.
it's just wild to think about. We're talking about the foundation of global finance being shaken by a dispute over drywall. But the sources highlight that this isn't just a domestic story.
No, not at all.
The dollar's weakness is also being driven by what's happening in Asia. Specifically, we need to talk about Japan.
Right, we have to look at the yen. The Japanese yen has been on an absolute roller coaster. And to understand why, we need to look at Japan's Prime Minister, Sanai Takaichi. She took office late last year in 2025.
And she's been described as pretty aggressive on fiscal policy in the articles we read.
That's putting it mildly. She passed a record budget, 122.3 trillion yen. I mean, that is a massive injection of government spending.
Okay, let's pause for a quick economics 101 here. If a country prints a ton of money to spend 122 trillion yen, usually that makes their currency worth less, right? More supply, lower value.
Exactly. Basic supply and demand. So the yen should be weak. But, and here's the twist, it's rallying. It's actually getting stronger against the dollar.
Why? That makes no sense.
Intervention. There are credible reports that the Federal Reserve Bank of New York, acting on behalf of the Japanese Ministry of Finance, has been in the market buying yen.
Wait, hold on. Let me get this straight. Trump says he wants a weak dollar. Helping Japan strengthen the yen causes a weak dollar. So is the U.S. actually helping Japan do this to drive the dollar down on purpose?
That is the leading suspicion among traders. They believe this is a coordinated effort. The Trump administration gets the weak dollar they want for exports, and Japan gets to stop its currency from completely collapsing under the weight of that new budget.
It's a win-win for the politicians, but it sounds like pure chaos for the markets.
It creates immense volatility, and the chaos isn't limited to Japan. If you pivot over to South Korea, you see the other side of Trump's trade policy.
Right.
He just accused South Korea of not living up to trade deals.
And the threat was tariffs again.
Tariffs on autos and pharmaceuticals hiked up to 25%. The market reaction was instant, a huge sell-off in Korean assets, but also a sell-off in U.S. assets held by Koreans. It creates what economists call policy uncertainty.
I saw that phrase, sell America trade, in the Investing News Network report. That is some brutal branding.
It is, but it fits the behavior.
Yeah.
If you are a global fund manager and you don't know if a tweet tomorrow is going to slap a 25% tax on your supply chain, you don't invest in America. You pull your money out.
You sell
You
America.
sell America.
And if you sell America, you have to buy something else. You're looking for an alternative. Which brings us to the existential threat mentioned in the sources. We heard about BRICS, Brazil, Russia, India, China, South Africa for years. I always felt like a summit where they just took photos and complained about the West. But the sources suggest it's becoming something much more tangible.
It's graduated from a talk shop to a genuine economic bloc. And it's not just those 5 anymore. They've added Iran, the UAE, Egypt, Ethiopia. They represent a massive chunk of the global population and, crucially, the global oil supply.
And they're building their own money.
They're trying to. It's called the unit.
The unit. Sounds like a bad sci-fi movie. How is this supposed to work? Is it just the Chinese yuan with a different sticker on it?
No, and that's the smart part. If it were just the Chinese yuan, India would never agree to it because of their rivalry with China. The unit is proposed to be 40% backed by gold.
Gold backed. That feels very 19th century.
And 60% by a basket of their local currencies.
Okay.
And in a way, it is 19th century, but the delivery mechanism is very 21st century. It would sit on a blockchain ledger called Mbridge.
Mbridge. Okay, help us out here. Why does the blockchain part matter? Is this just crypto buzzwords?
No, the technology is crucial. Think of the current banking system like a highway where all the toll booths are owned by the U.S. That's the SWIFT system. If the U.S. doesn't like you, they close the toll booth. You can't move your money. Mbridge is like building a completely separate tunnel underneath that highway. It bypasses the U.S. banking system entirely. If you use Mbridge, the U.S. Treasury cannot sanction you. They can't freeze your assets.
Because they can't see them.
They can't see them or touch them.
I remember that photo of Putin holding a prototype banknote at a summit. It seemed like a stunt at the time.
It was symbolic, sure, but the infrastructure being built underneath it is very real. And the Trump administration sees the threat. Trump issued an ultimatum, 100% tariffs on any country that attempts to replace the dollar.
100%. That is not a trade dispute. That is economic warfare.
It is. But we do need a reality check here. Our experts point out that the unit isn't taking over tomorrow. The U.S. dollar still accounts for, 89% of global Forex transactions?
So it's not dead.
Shifting that inertia is incredibly hard. And India, for one, is very hesitant. They want stability. They don't want to be locked into a system that might be dominated by China. So the dollar isn't dead. But the desire to kill it is higher than ever. The more the U.S. uses the dollar as a weapon via sanctions or these erratic tariffs, the more these countries are motivated to accelerate the unit.
They want insurance.
They want insurance against American policy. Exactly.
Okay, so we have the political chaos, the trade wars, the rival currencies. I want to bring this down to ground level. If I'm an investor or just someone trying to save for retirement and I see the dollar dropping, where is that money going? It has to go somewhere.
It's going to the classics. The flight to safety is hitting historic levels. We have to talk about gold.
The numbers in the report are just staggering. Gold hitting a record high of $5,200 an ounce.
That is almost a 90% jump since Trump's second inauguration.
90% in a year. That sounds like a crypto meme coin, not a shiny rock that just sits there.
It's unprecedented.
Yeah.
And the buyer profile is telling. It's not just, people buying coins for their safes. It's central banks, China, Russia, even U.S. allies. They are hoarding gold because it's the only asset that is truly neutral. It's nobody's liability.
And it's not just gold, though, is it?
No. The Swiss franc is at a decade high, up 14%. The euro has crossed $1.20 for the first time since 2021. Investors are desperate for anything that isn't the U.S. dollar.
Which leads to a term in the notes that really scared me, the triple sell-off. Could you explain what that is?
It's the nightmare scenario for a portfolio manager. In a normal market, you have a balance, like a seesaw. If stocks fall because the economy is slowing, investors usually buy bonds for safety, so bonds go up. Or they go to cash, so the dollar goes up.
Right. Usually one thing is up while the other's down.
Exactly. But a triple sell-off is when stocks, bonds, and the dollar all fall at the same time.
So the seesaw just broke.
The whole playground is on fire.
So there's nowhere to hide.
Only in hard assets like gold or commodities. When stocks, bonds, and the currency all crash simultaneously, it signals a total crisis of confidence. It means investors aren't just rotating from one U.S. sector to another. They are pulling out of the U.S. ecosystem entirely.
Taking their ball and going home.
Exactly that.
That is deeply unsettling. So what does this actually mean for the person listening to this right now? Most of our listeners aren't central bankers. How does this hit a normal household?
It hits your wallet, and it hits it fast. First, travel. Obviously. If you were planning a trip to Europe or Japan, your budget just got blown up. The
Yeah.
dollar buys fewer euros, fewer Swiss francs.
So the European summer vacation is on hold. What about here at home?
Imports. We import a massive amount of our daily lives. Electronics, clothes, car parts, luxury items, even the avocados for your toast. A weak dollar means it costs American companies more to buy those goods from abroad.
And they pass that cost on.
They are not going to eat that cost. They pass it on to you. So we get imported inflation just when we thought we had prices under control.
Great.
Right. And then there's the investment side. The volatility in the bond market, that triple sell-off, it affects mortgage rates. It creates wild swings in your 401k. If you're close to retirement, seeing this kind of instability is incredibly stressful.
Is there any silver lining at all? Or is it all doom and gloom?
Well, if we go back to Trump's argument, if you work for a U.S. manufacturing company that exports goods, this is actually good news. Your products are now cheaper for the rest of the world.
Right.
Companies like Boeing or Caterpillar, agricultural exporters, they could see a significant sales boost.
And I suppose if you were diversified, if you held some international funds or had a little stash of gold, you're feeling pretty smart right now.
Absolutely. Diversity is the only free lunch in finance. If you held foreign assets, they're worth more in dollar terms today than they were yesterday.
So to wrap this up, we are looking at a perfect storm. A president who thinks a crashing dollar is great for trade.
A Fed chair being investigated by the DOJ for office renovations, which screams political pressure.
And a geopolitical bloc actively building a gold-backed exit ramp from the dollar system.
And the market is reacting rationally to all of that. Gold at $5,200 is simply the market voting, and right now it's voting against the dollar.
We always hear about the dollar's exorbitant privilege, the idea that the U.S. gets to play by different rules because we print the world's money. It lets us run these deficits that would bankrupt other countries.
But that privilege relies entirely on trust. Trust that we'll pay our debts, trust that our institutions are stable, and trust that the currency isn't just a toy for politicians.
And that leads to the big question I want to leave our listeners with. We spend so much time worrying about external threats, China's rise, the BRICS currency. But when you look at the feud between the White House and the Fed, when you look at the DOJ getting involved, are we doing this to ourselves?
That really is the provocative thought, isn't it? If the U.S. government itself is attacking the very institutions that give the dollar its credibility, we might be witnessing the end of the dollar's dominance, not by foreign conquest, but by our own hand.
Something to chew on while you check your portfolio and maybe look at the price of gold one more time. Thanks for diving in with us.
It's going to be a bumpy ride.
See you next time on The Deep Dive.